Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres to keep up with my book releases, book tour schedule, signings, all that other good stuff. I always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Tosin Oduwole on the line, and he's founder and CEO over at Building Acquisition Partners United. Tosin, welcome to the show.
Hey, thank you for having me on. I really appreciate it.
All right, so excited to get into today's topic. So we're going to talk about investing in multifamily assets. But before we do that, let's go a little bit further into what you're doing over at Building Acquisition Partners United, also known as BAP United. Tell us a little bit more about your company, please.
Correct. So right now this is it's a Regulation D 506C real estate fund, and we're really focused on urban redevelopment of the south side of Chicago, Illinois. Right now is our first task. And so we have an offering of $100 million to where we're going to dump that into specifically the Auburn, Gresham, and the South Shore neighborhoods of Chicago to kind of just, revitalize the neighborhood, create a bit more economic activity, and just kind of bring it back to its former glory back in the 50s, 60s, and 70s.
That's awesome. I think it's a great transition, too. So let's just dive right into today's topic. So investing in multifamily assets. I know you've been doing this for a long time. Where do you want to start with this topic?
My first introduction into real estate was really from my parents. My parents had me somewhat young. They were, 23, 24 when they had me. By the time my dad was 27, he had owned about 220 units in St. Louis, Missouri, all multifamily residential apartments. So I kind of grew up in a real estate household, and, my mom did the property management. So my mom would be the one picking up the rent checks from the tenants, and, she used to drag me with her. I used to hate to go. I would have rather sit at home. But, she used to just drag me with her. And when I kind of look back at it, I kind of see that the type of freedom and time management that she had, because she didn't really have a 9-to-5. It was just picking up the rent checks and just kind of supervising the people that were cutting the grass, and if there was any maintenance issues. It kind of let me see how to live a life more on your own time as a young child. And so when I got to around 21 or 22, that was when I kind of said, you know what, I want to give real estate a shot and kind of, replicate what they did getting into the multifamily apartment building space. Fast forward a couple years later, I became co-founder of a Regulation A Tier 2 fund that was based in Atlanta, Georgia. And our first fund, we raised $8.5 million in the first 7 days of being live. We ended up purchasing.
First off, congrats on that. That's not an easy task, so congrats. Let's not just glance over that. That's a big deal. Good job.
Thank you. I mean, it took a lot of research, and it was something that we kind of prepared our audience for about a year and a half before we actually started raising the funds. But that was a success, and we were able to buy a lot of commercial properties around the country in, I think, about 5 or 6 states. And so I saw some ways in which that plan could have been done better. It's just having more of a concentration of the funds into one neighborhood so that you can kind of control the rental rates, the comps, and you're kind of concentrated. So you have a bit more power to yield. And so that's what we're looking to do with the second fund with this Regulation D, is to focus all of the funds that we can raise into Chicago's Southside neighborhoods.
Let's talk a little bit more about the opportunity you see in that market. Tell us a little bit more about where you see the value add.
I see the value because, when people hear the city Chicago, Illinois, the number one thing they think is violence. Chicago has been broadcasted all amongst the media for years, just being a very violent place. And a lot of people don't know that Chicago is also called the New York of the Midwest. It's a major economic hub for the Midwest. And violence has been down for, I believe, the last 3 or 4 years in a row. So there's a huge value add that because of the reputation it has, there are Class C and Class B properties that are generating, decent, 12, 13, 14% annual returns, and you're able to buy those things for next to nothing. If you compare it to a market like New Jersey or Atlanta, Georgia, where people are jumping up and down for 7 cap and 8 cap properties, But in Chicago, you can routinely see between 10 and 17 for the same quality of properties. And so really just wanting to kind of get in there before the bigger groups do, the bigger groups that don't necessarily have a social responsibility to the community, that they're just looking to make a buck. We kind of want to get in there first today. Yeah, we're looking to make a profit as well and return, 12% to our investors, but we also want to make sure that we're keeping these neighborhoods in line with what they started off being, and we're keeping the cultures the same, and we're not gentrifying the neighborhoods and pushing people out. And so that's kind of why I chose Chicago as probably our ground zero. And after Chicago, we're going to probably expand it to Cleveland and St. Louis, but Chicago right now is the most important for me right now.
Let's talk about the type of properties that you're looking for. Tell us a little bit more about that.
So preferably the type of properties we're looking for, 25 units and up. Class C properties on the value add. Class B, if we can get it like a 10 or 11 cap. So that's pretty much the guidelines for the property. As far as the location, anywhere on the south side. So whether that's South Shore, Auburn, Gresham, Inglewood, the south side is really our target.
What about and I'm not as familiar with that area. What about the years of the buildings there? What is the kind of range there in terms of build?
Gotcha. So the great thing about Chicago is that, just a little history lesson, Chicago and New York, their buildings are pretty much built the same. If you Google back in, I believe, the 30s, 40s, and 50s, Chicago and New York were in a competition to see who could build the highest and the biggest buildings. And so they were using the same structures as far as brick and steel. So a lot of these buildings were, built in 1920s, 1930s, 1940s, but they still have a high level of structural integrity and are still standing, and will probably be standing for another 50, 60 years before there's any major structural or foundational problems.
That's awesome. So, Tosin, if somebody's listening to this and they want to learn more about BAP United and about your funds, what's the best way for them to reach out and to connect with your brand and your team?
Well, great. If they check out our website, it's bapunited.com, BAPunited.com. They can kind of get an overview of what we're looking to do, see some details on our team, our legal team, our management team. Together, collectively, we have over 40 years of experience. They can also send me an email at info@bapunited.com, and I respond promptly. So I can send over our PPM docs, our offering, subscription agreements, all that stuff, so they can kind of have an idea of what we're doing, the returns that we're offering, and just, be a part of something great that's going to help enhance and rebuild a major city in our country.
That's awesome. Well, Tosin, really appreciate you coming on the show today to tell us more about BAP United and what you're doing in multifamily investing. And what a great story about, following in the footsteps of the mom and dad. I love it. I love to see that. The family business, man. That's awesome. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review on the Apple iTunes store. And if you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave some comments on the videos. Let us know what kind of projects and things that you're working on. And Tosin, thanks again for coming on the show.